Hi, my name is Jason Kraus. This presentation is on Harley-Davidson's 2017 annual report for financial management course at Concordia University. The agenda today may look familiar, seeing it as the requirements for this presentation. Harley-Davidson is broken up into two distinct divisions. One is the motor company, maybe what you think of as building the motorcycles, and the other is the financial, Harley-Davidson Financial. Both are brought together to make Harley-Davidson Incorporated. The financials that we'll be talking about today are of Harley-Davidson Incorporated, but we will be looking at specific problems to the motor company also. Revenue for 2017 was down 5.8% compared to 16, and net income was down 24% compared to 2016. What you want to kind of take a look at is revenue minus net income. So seeing that revenue is down, means that sales are down, but net income means how much we made at the end of the day after the sale, and that is down significantly. So what that means is everything we're selling, we're making less money and putting less money in our pocket by 24% than 2016. On the lower corner, operating cash flow versus net income, you guys can take a look at is year over year, and you can see the cash flow going down from 15, 16 to 17. An interesting point is earnings per share is also down by 21%, but yet Harley-Davidson still pays an increased dividend to $1.46 over $1.40 from 2016. The next is return on investment. How much money does Harley make on the amount that it borrows? And it returns 6.86% on the amount it borrows. But what does it return on the amount of equity that the shareholders already own? That's 28.3%. That is typically between 20 and 30% for a standard company. It's interesting that when Harley puts out their return on investment and return on equity, they split it. Return on an investment is for the motor companies. You can see on the chart, they're saying it's 29%, and the return on equity is 17% for the financial division. But when you bring it together, then it gets diluted down to 6.8%. Next is current ratio. Next is, days, sale days. Days sales outstanding. The days sales outstanding are 173 days outstanding, which is the amount of time it takes for Harley-Davidson to get paid for, say, one of their motorcycles they sold. That's up from 157 days in 2016. That's not a good trend. Days payable is 23 days compared to 24 in 2016, so Harley-Davidson's paying its bills a little bit faster. And days inventory, which always is a hot topic with Harley-Davidson, is 55 days held basically solid through 16 and 17. The cash conversion cycle, how long is comparing all of these three, inventory, days payable, and days outstanding, increased to 199. Take that in consideration to 53 days with Polaris, so considerably longer than a competitor of theirs. Current ratio. The current ratio is the total current assets divided by the total current liabilities, and that decreased from 16 to 17, so 1.23 is slightly more assets than their liabilities. One would be equal liabilities, and to assets, usually that number is between 1 and 3 depending on the type of company it is. The quick ratio takes a look at a little bit faster way that how if Harley Davidson is a little bit more liquid, in that they take out the inventory. So it's basically looking at how much cash Harley Davidson has on hand compared to its liabilities, and that's even less. That's about 1.06, so almost even. Harley Davidson has almost even cash to its liabilities. Looking at external forces, this is really the elephant in the room. When you take a look at this chart, you can see how sales have dropped off in the motorcycle market and kind of stayed slightly steady and towards 15 and 16 kind of dropping off. In the chart next to it, you can read in between 15, 16, and 17 the sales decline for Harley Davidson. So this is really the external force. The market has just kind of pretty much collapsed around Harley Davidson. Even though they still have 50% of the market share, it's a lot smaller market share than it once was. The internal factors, this is a quote directly out of the 10K. The company may not be able to successfully execute its long-term business strategy. And the business strategy is to build 2 million riders over 10 years, have 50% of the market be overseas or foreign market, release 100 new models, be the top 25% of the S&P, and be a sustainable company. Harley Davidson says when you look at the internal factors, this is what everybody inside Harley Davidson is trying to execute. Some links to the sales numbers and some of the definitions that I used. And thank you for watching my video.